Thank you very much, Mr. Mkalele, for moderating this meeting. Good evening, members or participants in this meeting. I am happy again to be in the ProDev hour. It's been quite a couple of weeks since we last met. My name is Richard Mukooba, your manager, the SACCO manager, the UPSTU. And I'm happy that I've interacted with most of you physically, but also on phone with some other people. So, in the interest of time and the fact that we are late, we'll directly deep dive into the discussion for today. So I'll request Mr. Mkalele to really share the slides so that we can walk through. And I want to believe that everyone is fine. We are going to have an interactive session, and feel free at the end of this session to ask any question you really want clarity on. We are readily available to respond. So, Rogers, without wasting time, please, you can share the slides so that I walk through. Our topic for today is understanding credit and loans. Many times I get questions from different people about loans, about credit in regards to actually the SACCO. This is a general view of the entire loan process, but we also secure to our products, the SACCO. Now, you realize that last time when we met, we discussed about managing personal finance as an individual. But like today, we are saying we're going to focus so much onto how can you borrow wisely and how do you manage your finances to achieve a better financial health. We all understand that mismanaging credit leads to stress, okay, and some financial setbacks. We shall get to understand what we mean by mismanaging credit, but we also understand financial setbacks, especially when it comes to recovery and payment of the loan. So we are saying wise borrowing creates opportunities, okay? And we shall also know what do we mean by wise borrowing. Move the next slide, Rogers. So by definition, what is credit? We are saying credit is the ability to borrow money now and pay it back later, usually with an interest. You borrow money now because you have a need, but you pay back later at a certain date, probably next month or the other month, with a component of an interest, and that's what we are calling credit. So what are the sources of credit? Where can you borrow? In simple terms, you can borrow from a SACCO, like Ghana Professional Science Teachers Members SACCO. You can borrow from banks and microfinance institutions. They are available for loans also. You can have mobile lenders. You hear the applications where you can, those apps where you can borrow, but you can also borrow from Momo. MTN has Momo, and the other mobile subscribers have different modes of borrowing, but you can also go to a shop and borrow. You can take your children to school and say, Mr. Headmaster, I don't have fees for this term. Off now, give me at least 2 weeks. You borrowed. You can borrow from your suppliers. Give me credit, I'll pay you later. So all those are forms of borrowing. The next slide. Now, we want to differentiate between good debt and bad debt. What do we call a good borrowing and what do we call a bad debt? Okay. And we are saying a good debt is used to acquire income generating assets and improve your future. For example, business loan. If you borrowed it today and you bought a taxi, okay, that taxi is going to make for you money, more income to supplement your income. That is a good loan. You're going to invest in your education. It's a good loan because in the future you'll actually harvest from it. Okay, you're going to put up rentals. So you're investing in an asset that is going to make for you more income. That's a good loan. And this other side, we are saying a bad loan is used to fund consumption and unnecessary luxuries. For example, if you borrow to buy a phone, must you have that phone? These are things you can actually do without. Okay, it doesn't require you to go and borrow to buy a phone. To organize a party, a wedding, an introduction. Many people borrow and go for introduction. At the end of the day, they battle with loans because it was a bad loan. This supplement on their incomes, they constrained the existing income to pay a loan that was used not wisely. So it's not wise to borrow a loan for luxurious um, items. Secondly, a good loan has a clear repayment plan. Before you borrow that money, plan what are the sources of income that will pay this loan. Okay? And a bad loan has no plan on clear sources of repayment. Someone borrows today and says, next month I expect some money, or in around October I'll pay you because I'm expecting some money from my brother, or they are going to pay me, they are going to buy my land, so I'll pay. This is not clear. It is not a clear plan. You should have consistent cash flow that can enable you pay a loan. By the way, for you to be able to repay a loan, you must use the existing incomes, your existing income to pay a loan. Never borrow a loan using projected incomes. Then we are saying a good loan comes with reasonable interest, whereas a bad loan has high interest and hidden fees. By the way, for most of us who borrow from banks, from experience, I've worked in banks for about now 13 years. We have slides in those offer letters with hidden charges. We shall hide like a 2% somewhere. But when you default, this is going to come out bold. Okay? And that's when you realize, oh, I did not read this sentence. What was it meaning? It was a monitoring fee, which is charged monthly. And that's why you say my loan is expensive. Okay? Some other banks will tell you I'm giving you at 12%. And yet in actual sense, there is another cost hidden inside there. So a good loan comes with reasonable interests. Okay? That is even understandable. Next slide. So now here we drive you into what UPSTU offers, our products. So as UPSTU, what have we now put on table for our teachers? In summary, I'll be very brief on this in the interest of time because there are many products, but we have what we call emergency loans. And many of you are calling me to ask about these loans. What are they? What are the interest charges? What do I need to qualify for this loan? What are the computation modes? We have what we call emergency loan. And you are saying this is a loan that is used for urgent and unforeseen financial needs. For example, you need to pay school fees urgently next week or tomorrow. You have a sick child and they are demanding for the bills. Okay, those emergencies. And we are saying we can give you from 1 million up to 500,000. And we are saying we can pay up to 11 months. The security or collateral for this facility is your shares and savings. And we are saying repayment mode is monthly. Now, interest for this particular facility is between 2 to 3%. And there are charges. Remember, I talked about hidden charges, but for us, we give you the charges in bold, in black and white. And there is processing fee of 50,000 for any loan below 5 million. We charge you 50,000 as a block figure. And then you pay insurance fee of 1%. Now, this other side where you see note, I will just go through the note. Many people, when we give them, when they apply for loan, say for example, I've applied for 2 million, in actual sense, our policy says we multiply 3 times your shares plus your savings. But we have found that we are not giving people the money they qualify for when you compute 3 times their shares plus 1 times their savings. Now, the reason is, remember, the security for this particular emergency loan is your shares and savings. So we look at even what the guarantors have. So this is a call to actually all of us, because at one time too we shall be guarantors also, to improve our shares, because what we need to see is that the amount of your shares, the actual amount of your shares plus your saving, and that of the guarantor should be in position to cover the loan you're taking. That's why we reduce some people's application amounts. And what we require is just fill the application form, copy of ID, 2 passport photos, savings and shares, and 2 credible guarantor. And we require that at least you'll be on the scheme for 3 months, at least 3 months, so that we monitor how you behave. Next slide. We have what we call micro loans. Those are small loans that can be borrowed between 100,000 to 1 million. And also the interest is around 3%. This one you can pay up to a period of 6 months. Processing fee is still 50, around just that 50, and insurance of 1%. It is more or less similar to the emergency loans. The requirements are all the same, only that here the interest is 3%, cannot be 2%. And this one can go up to 6 months. The next slide. Now, away from the emergency loans, where we look at only your shares and saving, there are other loans which most of us call salary loans. By the way, all our loans are salary loans, apart from the emergency and the micro. But these other loans are all called salary loans as a category, as a classification. And then in there are sub loans types. So these are the sub loan types under the salary loans. Why we call them salary loans? Because the repayment source is salary. But we shall never have a product called the salary loan. Salary loan is just by nature that your repayment source is salary. So under the salary loans, we have the business loan. And this is a product that is targeting members with businesses. I believe we have some members who are running businesses as their side sources of incomes. Now, if that person wants money for working capital, they want to buy stock, they want to expand their businesses, they want to buy machinery, we are saying we shall give them loans, and we can give them up to 100 million. They can pay up to 3 years. We can say, we are saying that loan size is based on capacity to pay. Capacity to pay, I mean, we shall look at your salary and how much you get from the business in terms of net, okay? Look at both sides, your net salary and then your business income. So we merge them together and we take a percentage of that to determine how much you can qualify for. The interest rate is 13% per annum. This is on a reducing balance. It is not a flat rate. And then the processing fee, we charge you 1% and insurance fee of 1%. So a total, we charge you 2% of that loan you're taking. So we give you the balance. This other side has the requirements. I will not go through all that in the interest of time. I just want to concentrate on the features of the loan product. So that is the business loan. The next slide. Then we have agricultural people who are in farming, okay? It could be dairy farming, it could be poultry, piggery, fish farming, but even those in agribusiness, okay? Even those in agribusiness. And we are saying the maximum amount someone can take is up to 50 millions. Of course, here is because of the risk involved in agriculture. We couldn't want to extend so much in giving bigger facilities. And we are saying this one is repayable in a period of 3 months. In some cases, we can ask for security where we feel the risk is so big. So don't get surprised if we say, please provide us with a land title. We could have seen that the risk is so big, okay? We shall also require experience. You demonstrate experience in farming. We do not want to start to finance starters. So we might ask you for previous farming records. I know we are not good at record keeping, but just to demonstrate experience that you know what you're doing. We don't want to finance you when you're going to start a poultry farming because you do not have the skills of managing poultry. It's quite risky. But interest is 13% and the other charges remain the same. 2% is still processing fee 1 and then insurance 1. Next slide. Why I'm skipping the requirements is because they are all similar. I'll go through all of them at once. A few things changes. There's what we call development loan, and these are given for large-scale personal or community development projects. For example, if today because the president is promoting science teachers be innovative, okay? You come up with innovations. Now, if today you want to come up with a waste management solution, I don't know how, but your solution is to manage the waste, which is a problem most of the town is. Okay, probably want to make electricity out of waste, and you're coming up with your ideas. So this is an idea that's going to benefit community, but also as a person. So we are saying we can finance such development. Okay, could be maybe you want to come up with an IT solution. You want to come up with any mention it could be medicine even. So we can give you up to a minimum of 20 million and a maximum of 100 million, and you can pay up to 5 years. Okay, and the loan size is up to 80% of your project cost. Of course, there is a lot of documentation about this, including feasibility study and environmental impact assessment for your project. We do not want you to finance a project that is going to affect the environment. So there are many things we can ask about there. Still, the interest is 13% per annum, reducing balance, and the charges is processing fee of 1 and insurance of 1. Next slide. We have what we call asset finance loan. For example, I want to buy a car. Okay, I want to buy computers. Mention them, any asset you might think about. We are saying we shall finance acquisition of that asset. You want to buy a motorcycle, a car, even a bicycle, or probably if we are able to finance it. And we are saying the maximum amount we can give is up to 100 million. The loan term you can pay up to 5 years. The loan size is up to 90% of the value of the asset of that car. Shall get to know the invoice and probably even value the car, but we shall give you 90%. Why we are giving you 90% is because we want you to have a stake in this car. At least if you pay 10%, for us we add on the 90%. We both have stake in the car. That's why we're saying your contribution is 10%. And the collateral can be the item we are purchasing. We shall take it as security for this loan. So the interest is 13%, and the two charges into processing fee and insurance will apply on the same. So you see all products are almost similar in terms of pricing and the features. What changes is the amount and the name of the product plus the repayment period. The next slide. Roger, the next slide. Okay. Now the other type of a loan is what we are calling home loans. And this is a loan product designed for members who want to construct houses or buildings. It can be completion, it can be starting from scratch, it can be completion of the house. It can be purchase, you want to buy that fully finished house or commercial building or residential building. It can be even buying of land. Okay, and we are saying the maximum loan we can give here is up to 150 million, but we are not saying this is the max. We can extend if there is justification for us to open this limit. We can always go to the board and we seek extension of the limit, probably to whichever amount we may deem fit, depending on your capacity to pay. But we require you to contribute at least 20% of that house cost. So that for us, we give you the 80%. And we can allow you to pay up to a period of 5 years. We can value that property. We may be forced to value that property, and we may be forced to take that property as collateral for the loan. Repayment is monthly, but interest is 13%, 1% processing fee, and 1% insurance. You can extend. You can go to another slide. There is what we are calling corporate loan. Corporate loan is that for corporate who has shares above 100. You're liable, or you're able, or you're eligible to borrow a corporate loan. We are saying corporate, a minimum of 10 million and a maximum of 1 billion that you can borrow. The loan term is up to 5 years. And the loan size is determined by the corporate savings. We are saying minimum shares of 100. It's what qualifies to borrow a corporate loan. But we can also ask for security to secure such large sums of money. We may ask for it if we deem so relevant. And the interest is between 3 to 5%, but this is a flat rate. We shall charge you processing fee of 1% and insurance of 1%. The next slide. Education loan. Since we are teachers, most of us keep upgrading. So if you want a loan to further your studies, we shall book it an education loan. So you may want school fees, but there are also those people with schools, and they may want to probably maybe do working capital for their schools, purchase scholastic materials, and other financing needs in a school, probably maybe financing construction of a dormitory, anything related to education. We shall finance it under education loan, and we can give up to a maximum of 50 million, but we can extend this if there is need to extend. And we are saying maximum period is 3 years. We shall ask for collateral depending on the loan amount and size. And the loan size is based on the capacity to pay. If, for example, you have a school, we shall look at how many students or pupils you have in that school and how much is the fees. Of course, even looking at your net salary, so that will determine how much you are eligible to get. The interest rate is 13%, processing fee will apply of 1%, and insurance fee of 1%. Next slide. Of course, the requirements are different depending on the type of loan that we are actually looking at. The next slide. It's what we call group loans. Now, assuming you're a group of teachers, science teachers, and maybe you have your group there in your school. Probably maybe you're doing a project, or you even have your small scheme of lending and saving, or you even have a project you're working on. Probably it could be a poetry project, could be something that you're working on as a group, and you want to borrow as a group, not as an individual. So we can give you a loan as a group, not as an individual. Then the group will manage their loans. I mean, their loan, probably give to the members, I don't know. But for us, we shall look at the group. And the maximum amount we can give that group is up to 50 million. Maximum loan period is 3 years. We may ask for collateral if we see the risk is high. And the maximum loan size is 3 times the group share capital plus the savings. We shall also look at it. Interest is at 13% per annum, processing fee of 1%, and insurance fee of 1% of the loan amount approved. Of course, the requirements are also related to group, like resolution, minutes, and all that. But in the interest of time, I didn't want to run through the requirements. Next slide. Okay, now those were the products I have just discussed. Now back to the general information. Understanding loan terms. There are terms you need to understand before you get a loan. For example, principal. Principal is the amount that we initially give you as a loan. I want 5 million. That is the principal. Then interest rate. It is the cost of borrowing. Say, for example, I've been mentioning about 13%, 2%, 1%, processing fee and all that. That is the cost involved in borrowing. Repayment period, the time given to pay back the loan. It can be called tenor. Collateral is the security fallback position of that loan. Guarantor, a person who supports your loan application and shares liability. By the way, when you're a guarantor, you are 100% liable. You actually hold the same obligation like that of the borrower in the event we are unable to recover from the borrower. So you become the secondary borrower. Next slide. So before you sign for someone, just get to know that you're actually taking a loan indirectly. The loan application process for SACCO, We are saying be an active member. Being an active member, we need to be consistent when saving and also buy shares. The people who open their account membership in January, even last year, yet the share is only 10,000 shillings and to be active. So if you also come to borrow, we may also not give you a facility or a loan because you're inactive. So it's important to keep saving and buying as every month, even if there are 2 or 3 or 4 or 5. Let's have that practice in us. Then identify your loan purpose. Why do I need this loan? Must I borrow it? Yes. What is the purpose? Am I borrowing to improve on my incomes? Or I am borrowing for, remember we talked about improving income and then for luxurious wants. So identify your purpose. Why do I need this money? Next is fill application form. We have application form. You can always call me. People have been calling me. They call my other staff and we share those application forms. And they are easy to fill. You just fill, sign, and scan back to us. Then we are able to process your facility. Then present credible guarantors who are SACCO members. We usually require that you provide 2 guarantors. And these are credible guarantors, by the way. Credibility, I mean by people who can stand in for you, who have the muscles to pay your loan in case you're not able to pay. People who are active and consistent in saving and buying shares. We look at all those, by the way. And we actually make a callbacks to get the guarantors. And if you guarantee a loan, I'll call you or my other staff will call you to confirm. Have you guaranteed this person? And will you take full responsibility of the loan? And you say yes, then we shall also record it. Wait for approval and disbursement. When you apply, you fill the form and you've sent. We usually require that you send also your national ID. For guarantors, there is a specific guarantee form you're supposed to sign and also scan back, which commits you onto that loan. You're actually taking a secondary loan. So as a borrower, you wait for approval. We shall approve your loan. We have a committee that sits and this approve your loan. Then we shall communicate as a team to you that your loan has been approved. And then we shall draft an offer letter, which we send and you sign on. Before you sign the offer letter, we shall never put your money. And after signing your offer letter, you send us a copy of national ID to verify the signatures and other information we verify. By the way, we verify that information. When you send us your ID, we double check with what we have in the systems before we disburse your money. So after when all those are complying, then we shall disburse your money. Repay consistently to build the trust. This is very key. If we give you a loan, for you to be able to qualify for further future borrowing, repay on time. And by that, you'll build trust. Don't wait for us to call you and remind you and say, yes, Mr. Godfrey, you have a loan to pay. You've taken 2 months without paying. You call someone and they're like, hey, you mean I've never paid? Okay? So like have that discipline of making sure your loan is paid on time so that we can trust you with other monies, even more than that. Next slide. Cost of borrowing. I've been talking about cost of borrowing. It is understanding the interest charged. For example, if you borrow 1 million and the rate is 2% per month for 6 months, it means that your month interest will be 20,000, but times the 6 months and the total will be 120. And that is the cost of borrowing. But there are also other charges like processing fee, insurance, those are all embedded in the cost of borrowing. So always ask, if you give me a loan, how much am I paying back? And what are the other charges? By the way, there is when you borrow a loan that we usually do not talk about. It is the penalty on default. amount in arrears. Every month you default, we shall charge you a penalty of 2%. Add on your interest, you the other party that you want to know. But in that offer letter you sign, there is a default. Those are the hidden lines in there. So read that offer letter. It has a 2% somewhere. Default rate. Every month you default, 2% will be added onto your interest. So those are all costs of borrowing. The next slide. Building a good credit record. So how do you build a good credit record? How do you build trust? Borrow only when necessary. Never borrow because the manager think is my friend and he has called me to come and take money, so I should go and borrow. Because I have a wedding for my friend, I need to contribute, I go and borrow. So never borrow because you have access to borrowing. They can easily get a loan and you go and just borrow unnecessarily. So borrow when necessary. When you have a pressing need, they cannot wait. Always pay on time. Okay? Have that payment schedule. I know many people, when you give them a loan, they don't even mind to ask, when am I starting to pay? But ensure you get a repayment schedule so that you know when you're going to pay your loan back. And pay on time. Don't borrow from multiple sources recklessly. I talked about because you can easily borrow from Platinum, Finca, Letshego, whatnot. The managers and credit officers there are your friends, okay? So they can easily give you, never borrow, never have multiple loans. Multiple loans means borrowing from everywhere. You're the same person who has loan is in your nearby shop, another one has a loan with a friend. I borrowed it from Momo. These online mobile telecos are also giving loans. You also pull, you surround yourself with loans. You're going to have stress and manage this kind of borrowing. You will not have financial discipline. Don't default or delay. It affects your trust level. We shall definitely lose trust in you. Imagine saying Mr. Sun is so is a defaulter. And by the way, my people will call you. My secretary will call you. And they will say, Mr. Muyambi, Mr. Ismail, you from January, you're not paying the money. What is happening? And they'll call you several times. And at some point, we shall even write a letter to you. But that is the worst when you write to you demanding for money, because that same record will be in your file. And trust me, you'll get hardships in accessing more borrowing from us, even from other lenders. Use SACCO loans productively. Don't just borrow to use unnecessarily, like without a purpose. Borrow to improve your income. Borrow and do a poultry project. Borrow and construct rentals. Borrow and do business. Like we want everyone to have more other incomes productively. Plan for your retirement. I've mentioned this, I mentioned it last time, and even now I'll mention it. Plan for your retirement. Borrow and invest. We have children. Where will they get fees next time? Borrow and invest in agriculture. Buy animals. That is productive. Not buying because you've seen your friend is putting on expensive trousers at school and he has 2 motorcycles, those other things. Please borrow productively. Good credit, high borrowing limit, and fast approvals. Of course, when you have a good credit history, when you have discipline, we shall even up your limit. We shall say, okay, for Mr. Richard, for us, we can even give you 500 million or 300 million. And trust me, just a call away, manager, I need a loan tomorrow. We shall approve and say, oh, for him, he's a very good payer. We don't even take time. Next slide. Warning signs of problem debts. What are the indicators that this loan that I have is going to be a problem to me, to you as the borrower? One, borrowing to repay other loans. There are people who will borrow from a friend to pay another loan because the other friend is pressing, because the other banker is pressing them, because the other money lender is on their neck. They be like, let me go and borrow from now the circle and I pay this guy, but you're just postponing problems. So never borrow to pay another loan. That is suicidal. Missing or delaying repayments, that is going to affect your cash flows because the debts are going to pile up, and this is going to give you stress. You'll never concentrate in class. As you're there, whichever car that drives around the school, you think these money lenders have come for me in class. Okay? You never concentrate. Borrowing for non-essential ones. I talked about this. Must you have that watch? Must you put on that expensive shoe? I know we must be smart, yes. But there are other average kind of clothing and other things and other styles we can live. Must you be in a double-storied house? Must you drive that Mercedes Benz? Okay. You can drive a Spacio, you can drive a Raum, you can drive a simple ordinary car. Hiding debts from spouse or family. I mean, this is your spouse. Why don't you share this? By the way, these wives of ours, they are good advisors when it comes to financial management. You just tell her, Madam, I need to borrow a loan to do ABC. She will advise you accordingly. She will advise you, and trust me, you'll pick her. Maybe you got this information when you were in a bus somewhere. Sorry for the Muslims. And your friends were like, you can borrow. You can borrow and do this and that. And maybe when you come discuss with your wife and she's like, but my husband. Remember, we have fees for X. We have this for the other one. No, let's first postpone the borrowing. So important to share with your spouse and your family about this. Of course, not with everyone. So solution, talk to a SACCO manager about Ali. But yeah, you can always call me for advice about borrowing and financial literacy. Education about loans, please always give me a call. Next slide. Tools to help you manage loans. You can use a loan calculator, like he has shared one, but you can always call us. We can always share with you a loan calculator. You can compute yourself before you even come to borrow. You can compute and say, if I need 2 million in 5 years, what will be the repayment? If I need 1 million in 2 years, can I manage it? You compare with your cash flows. Expense tracker, I talked about this in the previous discussion. Get an expense tracker for yourself. This will actually give you warnings when you're exceeding your income levels. That, my friend, you're overspending, please go slow. Monthly debt schedules, these are all reminders that will actually manage your debts when you're borrowing. So important to download these tools and have them with you for better personal financial management and management of loans. Next slide, Mukalele. The final thoughts of discussion is credit is a powerful tool if used wisely. By the way, many people have developed through loans. Never say a loan is bad. A loan is bad when you use it in unproductive thing. By the way, if you do an analysis of all the tycoons in Kampala and even those other towns, those guys have loans. Those ones you admire that are driving Porsche cars, they have loans. But because they have used those loans wisely, by the way, those guys will never borrow and like just for just. They will calculate, they will move from bank to bank, bank to bank, comparing interest rates and seeing who can give me that. Like Indians, it's very hard to give an Indian money that is expensive. That's why you'll find most of them in Bank of Baroda because that is Indian. They will actually give them even loans that are at very, very minimal interest rates, but they will borrow wisely. So your SACCO is your first and fastest source of borrowing. Please, why would you go for 20%? By the way, that interest you're borrowing from that bank is not the 16% you see on paper. Ask for other costs. Ask for other charges. Ask for other costs, ask for other charges, and put them all together. You find that that loan is very expensive. It's actually 36%, not 16% you see. So before you borrow, take note of that. And trust me, your SACCO is the most cheapest source to borrow from. Okay. The next, develop habit of responsible credit use. Yes, when you borrow money, be responsible. Don't get money and start, you're the person who is contributing in everyone's kwanjula and wedding and all that because they are going to say that tycoon has come. when Mr. So is in this party, it will be a success. Please be wise when you're using credit. Quote, don't borrow your future to enjoy the present. Don't borrow your future to enjoy the present. You want to use your pension that will come next year and enjoy it now. Borrow now. Give me money now. After all, I'm getting money tomorrow. Me, I want to consume now. I want to live a posh, luxurious life now, so that the future will cater for it. So let's have this plan. Next slide, Mr. Rogers. Okay, we have reached to the end of this session, and I think it has been interactive and people have understood a lot of things. So I'll go to question and answer so that we can also interact in this session, but also get more clarity. So back to Rogers to moderate the questions and answers. I'll be waiting to respond.
Yeah, the chairman, Mr. Kwizera actually has come back. He had dropped off. Mr. Kwizera, are you there? Are you able to unmute now? Hope your network is fine. I saw you had dropped off. Yes. Yeah, you have unmuted. You can speak.
Hello?
Yes.
Hello? Yes, Rogers. Hello?
Yes.
Can I hear from you? Hello?
We can hear you.
Now, my comment is, hello?
Yes.
My comment is, hello? Hello?
Yes, go ahead.
I would want to have the manager talk about the challenges we have found when we are assessing loans of members, and I think those challenges can inform the people who are intended to borrow, so that they can work on them. For example, I wish I can hint on the issue of having guarantors who are not substantive. Okay, someone wants 10 million, but he himself has few shares. The guarantors have really very few shares, very small shares, and it makes a person hard to be given a loan. I request the manager talk about that.
All right.
Thank you very much, Chair. This is very, very interesting. Many times we've received applications. Someone wants money and they really qualify. Like I told you, we multiply your share times 3. Assuming you have 1 million in shares, times 3 that gives you 3 million. You really qualify for that money as per our policy. But like I told you, we look at the guarantors. So we shall also go to the guarantor and see if the 3 million you want, we have to look at how much do the guarantors have. Can it, a summation of all, can it cover the 3 million that you want? Then we are constrained to actually approve your loan. Because you've given unsubstantive guarantors, uncredible guarantors. One, you'll find a guarantor who has only 20,000 in shares and is saving. And that one is a guarantor. That one is not a guarantor because I told you a guarantor is taking full responsibility, 100% liability of this loan. So we are constrained here and we reduce your loan to actually what fits in what we are seeing from the system. So that is a very big challenge we have found, that most of the guarantors need to improve on their saving. And this is a call for all of us because at one time, even you yourself, you'll be a guarantor. So let's up our shares, let's up our savings so that we can be good guarantor. Secondly, you find the guarantor they have given you is a defaulter. He has 2 months unpaid. Of course, you who is giving in this guarantor, you may not know that this person is defaulting, has 2 months unpaid. So we shall not take also that one. So we have found a challenge of low shares of the guarantors, but even the borrowers also. Someone has applied for money, about 2 million or 5 million, but they have 100,000 in shares. The multiplier factor cannot give them the money. And did you feel like this person should actually, they should go with the money? This money is really for us to really take and develop ourselves. But we are not raising our game on buying shares. And it should be a call for all the teachers. Let us grow our shares. Not only you borrow using the shares, but also dividends when the year is ending. Okay? Also inactive members. You'll find this member opened his membership in November last year, but up to date, he opened his membership and only deposited there maybe 500,000. He has never even bought any share this year or saved this year. So these are all the challenges we are encountering, and we shall continue to call on teachers or members to buy shares to up the game. At least have 50 shares. At least have 50 shares. So those are some of the challenges we are finding. And also the other challenge is someone has a running loan already, which he has paid only 2 or 3 installments, but is coming for another loan. Trust me, the policy will not allow us to give you a loan. And we shall be very polite by that. It's not that we are denying people money, but we have to manage risk. Can we have this loan reduced to 50%, at least for you to come for another borrowing? But we're also constrained to actually give you money. And we want to give you the money, but we are constrained. So those are some of the challenges we're encountering at the moment. Thank you very much.
Yes, I can see other members like Patrick. Patrick, you have your hand up.
Yes, good evening.
Good evening.
Good evening.
Good evening, Patrick.
Thank you. I've joined a little bit late, but I've heard few of the presentation. They're really very, very good, and they are educating. I want to make 2 observations. One, pertaining borrowing. I personally, I've just borrowed a loan from the SACCO, but the challenges which I've gone through has been the processing and the communication gap, which I see still a challenge. There has been actually no communication. I struggled for quite a long period of time. If we could improve on that, I think it would be better. We should improve on the communication gap there. We make everyone engaged. That is one. Then 2, on salary loan, because what I've gone for is the emergency loan. At first, I went for salary loan, but after waiting for quite some period of time, at first they said the union is already giving the salary loan, but I got disappointed at the end when I was told that the coding has not been done. And I don't know how far with the issue of the coding, because it makes no sense if a members again go and pick loan or salary loan from a bank, yet we have our own union, which mandate is clearly to support us and make us grow. So I don't know what the secretary will say about the coding, so that we should also begin picking the salary loan and we grow the, we grow the SACCO. That is my concern. I've joined the presentation a little bit late, but what I've heard is quite interesting and really educating. I'm so happy that this time around we have to join hands together and we build our SACCO. Thank you.
Thank you very much, Patrick. I really appreciate your feedback. To respond one, I'll start with the second one. We talked about salary loans. Now, we had a little bit of delays. Currently, we're not giving out salary loans. reason we were pushing, at the start we were pushing to have standing orders. But when we went around the bank, we realized standing orders are going to be a problem to our teachers. The case in point, if you set a standing order date and the date reaches when there is no money in your account, remember you have no control on payment of your salary, and usually there are delays. In most cases, there are delays actually. And if that money is not there, that bank will start to slap you heavy charges. So imagine you're paying you're being sacrificed for the crimes you did not commit. So we saw it was very expensive for teachers. So our management sat and resorted that we should go for coding because for it is not costing. So we started on the process of pushing for the code. Even today we had a movie star that came to our office still about the code. And I am happy to say that if all goes well by end of this month, we will have finished to get the code. So that is how far we are pushing that so that we are able to embark on the salary loans. But we are fighting, the chair, myself, and the other team are seriously fighting to ensure that we have the code and run immediately. The other issue was about processing time and communication. Yes, I acknowledge this issue, and trust me, we are going to improve on communication going forward using the different channels. But thank you very much for your concerns.
Thank you.
I hope I've responded to your issues.
Thank you.
Okay, I can see Madam Avako is on. Mr. Okello, these are some of the union leaders. You can maybe say some remarks as we conclude. Madam Avako, do you want to say something? Mr. Okello? Okay. Maybe Ms. Akwizela, if you have a final remark, you can give because our time actually has gone. And then we can close. Okay. Yes, Mr. Okello.
Yes, please. Can you hear me?
Yes.
I'm thanking the manager for the presentation. It was okay. I'm concurring with what the chairperson of the SACCO says, that we should be strict on the lending of the money, so that because the main aim is building the SACCO. We should be strict so that we reduce on the defaulting of the money. I'm very happy about with the presentation of the manager. Thumb up for that. That's my only comment.
All right, Mr. Okay, manager, you have some compliment here.
I'm very thankful to the team. My final compliment would be to encourage members to really like whatever the union and the SACCO is doing, subscribe, save, because in the future we want this to be a science teachers bank, and that is our vision in the future. So I'll encourage all teachers to really check with the accountant, check with me, check with every staff so that they can find out the status of their accounts. But I'm happy that most of you are coming on board and things are moving on well. We pledge much support and always be there to respond to whatever questions you may ask and concerns. Please feel free to WhatsApp. My number is always open, and also call me for any engagement regarding the progress of the union and the entire activities of this organization. Thank you very much for really participating in this ProDev hour, and I want you a very good night. Thank you, Mukooba, for organizing. I see some more hands up.
Yeah, thank you. I think our time is really spent, and we would like to conclude, unless if someone has something very burning. Mr. Patrick, you still have something burning?
Yeah, sorry for coming back again. What I've forgotten is I wanted to know whether I can buy off my loan. And if I'm buying off the loan, can the union give me some discount? Let's say I pick a loan which ran for 10 months, and maybe after paying to the 6 months, I wanted now to clear it. I want to buy it off. Can the union give me some discount?
Thank you very much, Mr. Patrick, again. For buyout, yes, we can buy out, but not at this point in time. Like I told you, we are still pushing the code. So as the code is obtained, we shall be able to buy off your loans, because I know there will be long-term loans. About the discount, for us, we shall buy out that loan at our interest rate of 13%. Remember, when you're buying out a loan, the other side, you're not charged. Gone are the days where banks used to charge people about 10% for early payment closure, but right now the government waived off that fee, so it's you buy off or you sell your loan free of charge. So trust me, you'll save when we buy out your loan. You'll save some more interest. I beg to submit.
Okay. Okay, thank you very much, members. I think that is it for today. Next week, we go back to look at the union programs. We have the SANS innovation competition, which is happening actually next week. The very first competition, the unions are giving a service to schools so that we can see the projects that are coming out and innovations. So tune in next week for more updates about that and other sessions that we shall have on ProDev Hour. In case you have never been a speaker, you can be a speaker. You can be able to contact the education committee. You can be able to contact any union leaders, send in your topic. Maybe you have a good presentation, you're a master trainer, you are a public speaker. Yeah, this is a platform for everyone. So it's not only, don't be only a listener. Next time, you can be a speaker. So send in your topic and then you can be scheduled to speak. Yeah, thank you very much for today. And I want to wish you a nice evening. May God bless all of you.